Good morning, winners! Welcome to Terry's Tips. So listen, today we're going to talk about mistakes to avoid when refinancing, y'all. Yes, go get a notebook and go get a pen because so many people do not even understand what refinancing is and how it can be a benefit. And some people don't understand what they should be looking for and actually end up hurting themselves by picking the wrong products. Okay, so we're going to talk about it. And real quick disclaimer, I am specifically talking about refinancing with mortgages and real estate loans. However, a ton of people come to me about refinancing their car. Guys, so some of these same principles can be used and you should consider mistakes to avoid when trying to refinance anything, even a vehicle, okay? And I'll just be honest with you, I'm not super big on refinancing vehicles. I'm very into, getting assets and using your assets to pay for your liabilities. But if you have super bad terms and that's your only option, then by all means, but I would rather you, work on your credit and use that hard inquiry and that financing to get, a business loan or a real estate loan or investing or whatever it is that you want to do to kind of multiply and build wealth. But, option is up to you. So if you need to refinance your car too, you can use some of these same principles. Got it good, y'all. And for my newbies, welcome. My name is Terry. I am a personal and business credit guru. I upload brand new videos every Tuesday and Thursday morning. I am also a mother, an investor, a YouTuber. I have helped thousands of people across the nation, leverage their credit to build wealth. I've also retired myself from corporate America and I have my own consulting firm. If this information is helpful, if you want more information, subscribe, like, share, comment. I do my very best to answer the comments, and kind of go back and interact with you guys as fast as I can. So, please, I would love for you to become part of our Terry's Tips community, okay? And I'll do my nugget at the end, guys. So let's jump right in. So number one, when kind of understanding, kind of mistakes to avoid when refinancing is understand your current terms, guys. So many of you kind of got a mortgage a while ago and haven't kind of looked at your loan statements and don't understand the product that you have. Maybe you've refinanced or gotten a modification before and you haven't taken a look at it. Before you even consider refinancing, know what you have right now. What is your current rate? Is it 10 years? Was it 15 years? Is it 30 years? Is it fixed? Is it adjustable? Make sure you look at what is the financing you have right now. Mistake number one to avoid, because some people just jump into refinancing and they have no idea what they're currently kind of paying. Okay. Mistake number two is not understanding what your credit looks like. Guys, for auto loans, if you're refinancing, and for mortgages, the whole point of refinancing is to get better terms, right? To have a better situation. So if your credit is bad, you're probably not going to get better terms, right? So this is where pull your own credit report. Make sure you understand where you currently stand so that even when you're kind of researching all these products, right, that you actually are able to qualify for them and actually get a better product. Otherwise, guys, it defeats the purpose. I've had people come to me to refinance their house and refinance their car, and their credit is even worse than when they got started. No, guys. Know where your credit is right now, and if you need to work on it first before you refinance, that you can actually get better terms. Got it, y'all? And I'll link some videos to help you with that. Number three, and guys, these aren't in any particular order I can talk to. They're not in any particular order, but another mistake to avoid is understanding your specific goal for the refinance. Meaning, are you just trying to pay the mortgage off faster? Are you trying to get more money in your pocket every single month? Are you trying to get money out of your property to kind of leverage and kind of invest in other things? You must know your goal for the actual refinance. That way you can actually evaluate the products and make sure you're getting something that's actually good for you. I was doing a good job, but my mouth is so dry. I'm sorry. Okay, so what is your actual goal? Another mistake to avoid is not exploring all options. So let's say you currently have a mortgage and your goal is that you want additional money to actually leverage to kind of maybe do real estate investing, right? My channel is heavily focused on real estate investing, but I help businesses, entrepreneurs, first-time home buyers, people at all different levels. But let's say that's your goal. Well, find out, is actually just doing a traditional refinance the best option that will maybe put some money back into your pocket? Or would maybe, a cash out refinance be a good option and understand the terms? Or would maybe a home equity line be the best option? Maybe the home equity line has better rates, less closing costs, that there aren't as many fees associated, and that's something you can use over and over again. So before you even kind of sign the dotted line or commit to anything, make sure you explore all options that actually get to your goal. Okay, guys, got it good. Another thing is, another kind of mistake to avoid is not understanding the fees, guys. This is huge. I promise you, banks make money on interest, and understanding the beginning of your loan, the beginning of your mortgage, you pay so much more interest, right? And so this is where, say a mortgage, a refinance is $7,500, right? Let's say that's the fees associated. And guys, this is where also real quick, sometimes you'll hear about refinances being like no cost, or like in the market, we kind of want you to kind of make sure you're not getting kind of hit with junk fees. This is where nothing is for free, okay? Banks make their money. So sometimes it may be no cost, but then maybe, they're taking something onto the principal, later on, and then you're actually paying interest on that. So you're actually paying even more, even though no money came out of your pocket. So understand the fees. And what I mean by, kind of understanding your goal and how this kind of ties in is, let's say you do, a refinance and all the fees associated are like $7,500, and that's going to save you $200 a month. And let's say you stay in that property for a year, okay? And then you end up either selling it or moving out. And so you saved $2,400, but you just spent $7,500 refinancing. Okay, so you're lost in that scenario, okay? It looked like you saved $200 a month, but really, the fees associated with $7,500, and you were going to sell or kind of move out of that house or whatever in a year, and that only saved you $2,400. So you were negative. So that's why I said understand your goal. Are you going to keep that house? Are you going to sell that house? Are you going to rent that house out? That comes into consideration when kind of evaluating what is the best product for you. Okay, guys? Another tip, another mistake to avoid is basically like not shopping around. Guys, I'm super big on you guys not getting a bunch of hard inquiries. And when you do a cash out refinance or a home equity line, or, just a regular traditional refinance, they are going to do a hard credit pull. However, in the beginning, when you're kind of shopping around, like, don't go to just one bank and just take whatever they say, guys. This is where ask questions. Maybe look at your current lender. Maybe look at your credit union. Maybe look at who you currently have your checking and savings with, a bank that you already have a relationship with, and ask them about their products. I'm even going to give you an action item to go into their website first and even research what is their cash out refinance, what is their traditional refinance, what is a modification, what is their, home equity line. Do some research about their financial products, and then pick up the phone and ask them about their approval criteria. Only formally apply with the lender that is going to meet your needs, number one, and your goals, but also the lender that kind of most closely matches your approval criteria, that you kind of meet their approval criteria. If one bank says you need to be a 680 and you're a 650, and another bank says you only need to be a 640, well, you're not applying with the bank where you're a 680, guys. Use strategy. If you are going to have a hard inquiry, let it be one inquiry, one approval. So at least if you did get a hard inquiry on your credit file, it was necessary, but that hard inquiry resulted in you saving thousands, whether it is with kind of investing or paying down principal or having better terms. Got it good, y'all. Like, seriously, these are like simple things that so many people do not do, and then they get into loans and kind of new products that are not a benefit to them. They're actually kind of taking a step back. Another kind of mistake to avoid is not understanding like the length and like what, the terms of the loan. And what I mean by that with the length is, let's say, a traditional mortgage is 30 years. Let's say you've had your house for 5 years, right? And then you go ahead and do a refinance, and you actually refinance for another 30 years. Well, it actually looks like you saved some money, right? But that's because you're doing a smaller amount over that same 30 years, guys. So if your goal is to kind of pay off some real estate, kind of be, buy and hold, or have it in your family for generational wealth, or leave it to your kids, if you can, maybe if you have 25 years left, guys, you can customize some of these products. Maybe get a 25-year loan. Don't necessarily refinance and keep one every time you refinance and getting to another 30 years, another 30 years, another 30 years. You'll be paying it off forever. At least if you've maybe had your house for 5 years, then you refinance into a 25-year product, at least you're still having the same payoff date. Got it good, y'all. And then the last tip is that, kind of don't be pressured. Like, don't try to time the market. And what that means is that the market, rates Market, real estate, everything. There's always going to be fluctuations. It's always going to go up and down. Kind of right if it's the right time based on what your situation is, what your goal is, what your credit is, right? And what is the best option for you right now? What are you actually trying to accomplish? And so don't try to wait it out for rates to kind of lower, because this is where, you know, rates can be lower when they charge you points, or maybe the fees are really high, or maybe you extend the terms. So this is where, you know, it's so many variables to consider. That's why I started with understanding what is your actual like loan product right now, what is your goal, what is your credit, and then shopping around for the best option for you. That's going to give you more success than trying to kind of like time the market, okay? Because there's always going to be fluctuations. All right, guys, so sorry about that. Like, my mouth is so dry today. OMG. And so I hope that that was helpful. Just make sure that you know what it is you're getting into. And honestly, you know, just for me personally, I know some people would do like a cash out refinance and say you get $20,000 and they'll use that to pay off debt. I am not a fan of, you know, using no equity in your property to just pay off debt. It's a smarter strategy long term. It can be a smarter strategy if you're open to this, to actually acquire income producing assets that will then pay off your debt. And after your debt is paid off, those income producing assets will keep on paying you. So in this case, at least if you took equity out of your property, you've multiplied that money. You haven't just paid off debt and didn't go anywhere. You actually multiplied that, and it's going to actually continue to help you build legacy and lifestyle. Okay, got it good. So I hope that that was helpful. And for my nugget, guys, when you're building anything, building a business, building a brand, building an investment career, don't feel the pressure to be like perfect day number one. I mean this. Social media and these groups and Zooms and all these different kinds of things could be a blessing and a curse, because some of you are comparing your year number one, your year number two in business, in branding, in podcasting, in investing to someone else's year number 10, year number 15. And you're putting all this pressure on yourself. Guys, listen to me. I am an expert, hands down, when it comes to credit. Period. But I'm not an expert at branding and social media and these videos, as you can see. Like, I've gotten better, but there's so much more that I have to learn, and it's overwhelming. Listen, I do YouTube, Facebook, and Instagram. I haven't done TikTok, and I haven't done Reels yet, and I haven't done, you know, Twitter. Like, I can only do so much, and what works for somebody else may not work for you. Even with relationships, you're comparing your, you know, 1 year kind of courtship with someone else's, you know, 10-year marriage, where they've kind of worked through all their problems and now they're best friends. They've kind of learned each other's style. They're in a different place. Guys, don't feel the pressure to be perfect. Allow yourself to grow. Allow yourself to learn. Stay true to what it is you're trying to actually accomplish. And just set the goal to always be better. Do you need to work on your branding? Is it your marketing? Is it your financing? Is it your spirituality? Is it your health? You know, is it your finances and your credit? Set the goal to be better, but don't set the goal to be perfect or to be, you know, like someone else who may be in your industry or in, you know, has the results that you want. They took a while to get there. Don't feel the pressure to be perfect day number one. It's a process. Got it, y'all? Got it good. So I hope that was helpful. We discussed, you know, mistakes to avoid when refinancing. You know, my nugget, if this was helpful for you, smash that like button, subscribe, you know, comment, let me know if this was helpful. And I'm looking forward to celebrating so much more of your success. Have a great day, guys.